Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 28th COT report of 2013, and as usual we're going to start off with the changes in commercials positions. So here we go. We've got S&P 500 on top of our list. We have a 24% change in commercials positions, roughly the same change size in large speculators positions. You can see the changes are a bit larger than average, but we did see larger changes in the past. This can be considered a bearish change. Of course, it may affect prices in the near term, but let's have a look at the 5-year chart and see the wider picture. If you remember a couple of weeks ago, reports ago, we've talked about a bearish extreme from the report. You can see that prices reacted, declined a bit, but nothing too long. So actually, prices are back in rally mode. And of course, because of that, we may expect this extreme to widen to even greater levels before we really reach that big top. Let's have a look at the gasoline. We have a 18% change over there in commercials positions, roughly the same change size in large speculators, and a larger change in small speculators. Of course, these are bearish signals that may affect prices next week. Let's have a look at the 5-year chart. Here we go. You can see that we had a bullish extreme not long ago, 2 weeks ago. Small speculators were below the zero line and net short levels, very pessimistic about the market. And as you can see, whenever that happened in the past, that usually coincided with a beautiful bottom in prices. So that's nothing unusual. Prices have reacted to this extreme, and I believe this rally may easily continue for some time because we are not at an opposite extreme. That would be if commercials could reach roughly 100,000 contracts net short level. And as you can see over here, when that happened, that usually coincided with a top in prices. So we're not there yet. Prices have still some time to rally even more. Moving on to NASDAQ, we have a 15% change both in commercials and large speculators positions. Again, this is a bearish signal as in S&P 500. Here you go, you can see prices have actually declined Thursday, Friday. Let's have a look at the 5-year chart, but I believe we're going to see a very similar picture as we had in S&P. Yes, you can see actually, I believe large speculators were at all-time extreme levels. You can see prices did react, but as in S&P 500, this decline was a very short-living decline, and now we can see prices again rallying. So the same thing applies as in S&P 500. We may see this extreme widening a bit. Moving on to large speculators, COT Extreme. Here we go. Crude oil and Australian dollar, all-time signals. Let's open crude oil. Not only do we have all-time in large speculators, but also in commercials. And all this happening as prices are rallying very extremely, you can see on the chart over here. So of course the question is, when would this rally end? Of course, when we reach an all-time extreme doesn't mean that the next week prices will react. You can see that basically a really nice extreme would be if also small speculators were at an extreme level. You can see that's not the case at the moment. So if small speculators could reach at, let's say, about 50,000 contracts net long level, coinciding with an extreme in large speculators and commercials positions, then it would mean all market participants are at their extreme levels. Anyhow, the fact that commercials and large speculators, the biggest players on this market, are at their extreme levels does suggest that we may see a decline or a top soon. Of course, this soon may mean a couple of days, but also a couple of weeks or even a few months. Moving on to Australian dollar, where we have an all-time, this time only in large speculators positions. Here we go. Of course, opening the 5-year chart, everything will be seen on a wider scale. And yes, you can see that prices last week have rallied a bit. So we may have reached the bottom over here. So we were talking about the Australian dollar. We had this all-time extreme for some time, and we were saying, well, if prices will not react to this extreme, we may see a commercial capitulation. Well, it doesn't look like that. We're still at this all-time extreme. It's lasting a bit longer than usual. You can see some examples for that in the past. So we may actually see prices bottoming out, and we will find prices rallying. And then our last market, the Minneapolis Suite, we have a 410 report extreme over there in large speculators, also a pretty large extreme in commercials, a 422 report extreme over there. These are, as you can see on the chart, very bullish signals. If you look back in time, you can see whenever commercials were net long or close to the zero line, that usually coincided with low prices. So we should expect this to happen again. We may need to be a bit more patient and wait for a few more days or even weeks. Okay, that's all for this week. If you would like to have a look at other COT charts, you can do so at our COT charts page. If you would like to have a more in-depth and detailed COT analysis, well, there's the COT analysis page. You can add other really useful functions to our table: the long-term trend, volume and open interest scores, the COT index. You can look at market complexes, new COT report types, data types. Look at our highlights page. So all sorts of really useful functions that you may use. I hope you enjoyed my review, and I hope to see you next week. Have a great weekend. Take care. Bye-bye.